All right, so I'll try and make my facial expressions match like what we're actually talking about or something like that.
Yeah, just don't even think about it.
Let's try it.
Okay.
Let's try it. What do we have to look? Let's do it.
Fuck it. Right. Hey everybody, this is Brian from Bullish. I'm joined by Will Hershey. Will is the co-founder and CEO of Roundhill Investments, which is a registered investment advisor and ETF sponsor. Will and I actually met on this website called Twitter, probably about a year ago, I'd say, right? I think it was something like that, Will, right?
Something like that. It's been a while.
And I think I just probably saw Will talking about something really interesting to do with esports and reached out and started talking. And I figured, him and I have been having some great conversations to date and wanted to bring him on to hear a little bit about his story and what he's been working on over at Roundhill. So Will, tell us a little bit about yourself and, what your history is and what you're up to today.
Sure. So I think you kind of did the formal intro. But in terms of what we're trying to do at Roundhill, you mentioned it. Really, it's create exchange-traded funds, financial products that are targeting what we believe to be secular growth trends in the market that younger people are passionate about, that they believe in, that they want the industries and companies to succeed. For our first fund, as you kind of alluded to, we launched focused on video games and esports. We recently launched our second ETF. Both are on the New York Stock Exchange. First one, ticker symbol NERD, NERD, which we love. We recently launched BETZ, focused on online sports betting and online casino. And really, you're going to try and continue to roll out new, innovative, what we believe to be differentiated products in the market that are going after these really exciting areas in the space.
Yeah, that's great. And actually, it's funny because I would say about a year and a half ago, 2 years ago, I was on my own personal journey, making a little bit of money at my last job. And I was going around to all of these financial advisors and wealth managers I was put in touch with. And one of the things that I was asking them that I feel like I was let down a bit was I'd go to them and say, look, I see the opportunity with esports or, sports betting or electric vehicles. How can I ensure that my money is invested in these kind of trends? And all of them generally kind of brushed me off and turned me away. And I was always kind of left wondering, like, why can't they simply just put my money into some of these kind of ideas that exist or trends? And I'm curious, how are you seeing, with what your kind of mission is, how have you seen a lot of the adoption so far? And, how's the journey been launching these products with the financial community?
Yeah, so I'll kind of take a step back because I didn't even address like how I kind of came to get here in the first place, and I think that'll kind of give you a little bit more. So first got involved in ETFs, exchange traded funds, back in 2012-13, where I was part of a small team that helped launch 2 energy focused ETFs, very different from what we're doing now, but really got to understand, one, how important product is and really delivering on, and this kind of speaks to what you just asked, how important it is to kind of pass the sniff test. If I'm an energy ETF, I better be focused on energy companies. If I'm an esports ETF, I better be focused on esports companies. That was one. And two, really got, as part of that small team, really got to understand, how do you even go about launching an ETF from an idea into a product listed on the New York Stock Exchange? That's step one, but then really your work starts. And how do you tell that story? How do you grow assets under management, which is effectively how we make our money. Then I spent time in active management, was most recently a head trader for a long short energy fund, and said, do I want to continue my career trading stocks, which is glorified button pressing? No. Do I want to tie my career to energy? More specifically, it was midstream pipeline assets. That was a hell no. So got together with him with kind of mission of let's create really these interesting products. And it's funny you talk about product construction, or you kind of alluded to it. I just tweeted today, it's crazy how many of these thematic ETF products count Apple, Nvidia, Microsoft, Facebook as their top holdings. Really, if you're looking at Apple, for an example, the only fund that Apple should be your largest holding in is either a smartphone ETF or just something weighted on market cap. And really, we take the approach that let's actually not only try and identify the companies that best provide exposure to these themes, but let's also weight the portfolios themselves in a way that's really representative and gives investors the tools to make an informed decision on, do I want to go long this sector? Do I want to even short it? And really get the exposure they're getting in terms of what it says on the wrapper, if you will. And so far, we've had pretty meaningful success. NERD, our esports fund, is sitting around 30 million in assets under management, which is, all things considered, about a year and a pretty successful launch. And BETZ, the online sports betting one, has really taken off. And I think kind of proving out our broader concept of kind of Peter Lynch style investing meets ETFs, give people things they understand that are simple, and really tell the story in a way that resonates with a lot of people. So that's up to, I know we talk about Robin Track from time to time, over 20,000 holders on Robin Track, somewhere around 90 million in assets under management.
Yeah, that's impressive. And I guess just thinking about those two categories that you're operating in with both esports and sports betting, what made you initially get into esports as like identifying the first opportunity versus cannabis or any of the other kind of buzzy, trendy meme stocks or trends that have been out there? Why esports?
Cannabis would have been a fit for us at the time. I think there were probably 3 or 4 that were already out there, and I think just from a business standpoint, being first to market or second to market is really an advantage in the world of ETFs, because there's not a whole lot in the way of intellectual property. So that definitely played into it. But in terms of why we chose esports for the first one, and this, once again, Peter Lynch, invest in what you know, invest in what you believe in, invest in kind of what you're seeing happen around in the world around you. Tim, my co-founder, and I started talking about esports when it was Ninja and Drake blowing up Twitch with hundreds of thousands of people watching. You had Bob Kraft buying into the Boston team in the Overwatch League. It was like all of these things happening around us, and it felt like gaming was really kind of taking that next step in terms of mainstream culture. And we said, most people can't invest in the private assets that get you exposure to the space, whether that's an esports team or a company like Epic Games or something like that. Let's go ahead and put it in a way that everyone can get involved, kind of democratizing what otherwise might seem like something you can't invest in yourself.
Yeah, and it's been interesting because I think the conversation, at least that I've seen just with friends and family, has been, oh my God, can you believe that people watch other people playing video games online? And I always remind them, like, look at what the NFL or the NBA is. It's all just a matter of like competition and sport. This is just a different kind of it. The other interesting element that I found was Netflix, a couple of quarters ago, mentioned that one of their biggest competition, from a time spent standpoint, was gaming. Are you seeing that this, how big do you think that this market can get from where it's at right now and where it's trending to, the COVID effects and where it could continue to grow? Is this, how do you think about this in the broader kind of, trend?
No, it's a great question. And in terms of COVID and what's going on right now, this should be obvious anyways. More people are playing video games than ever before. More people are also watching other people play video games. And I think what coronavirus did for the industry was, due to a lack of traditional sport, you had ESPN broadcasting esports in prime time slots, and that really improved the kind of awareness. But when we look at the industry, you're talking about 400 million people globally that are watching esports. More people watch gaming and esports than Netflix, HBO, ESPN combined. So there's a ton of people watching. Just so happens that at current, a lot of those viewers are concentrated in other parts of the world, whether it's Korea or China, or the EU is even further along than the US. So I think what's happened due to coronavirus is we've gotten more of that awareness in the US, which is such a sports centric culture, and you really realize it kind of when sports go away. In terms of the size, I think a lot of people look to Newzoo, which puts out a data point that suggests esports is around $1 billion market. I think that is severely understating the size and scope of the industry. The games industry is $150 billion per year, larger than the global box office and music industries combined. And when you look at which games are really being played as esports, incorporate that into your calculation. Also incorporate hardware that's being purchased to competitively play. You're talking about a $45 to $55 billion market, much different than $1 billion. And I really think when we're looking to put together these ETFs, we're going after what we believe to be secular trends. Yes, video games and esports are doing really well. right now, but they're also set up for kind of this generational change that, younger people, even younger than ourselves, not just millennial, Gen Z, are turning to video games and watching people play video games in lieu of other forms of entertainment. And that's something that we can think is going to continue to play out. And I don't know if we'll get to the point where Korea is, where young kids want to grow up and the first thing they want to do is become a professional gamer. That might be more of a cultural thing. But I think we're seeing kind of the glimpses of that start to play out.
Well, with all of these numbers that you've just suggested, which are staggering, especially some of the global numbers, with how in Korea, Japan, some of the Asian countries are doing so much, they're so much more further along. Why do you think there's a hesitation or a misunderstanding of this market with like investors in the US? Like, wouldn't you think that, with Amazon buying Twitch, you'd think that more people would want to go and, participate in this trend? What have you seen be kind of any major reasons why people might hesitate to want to participate?
Yeah, I think part of it is kind of a lack of kind of pure play gaming companies listed in the US, right? You have, in terms of household names, you have Activision, you have EA, you have Take-Two, and throw Zynga in there. A lot of these companies are actually listed in Hong Kong or listed in Japan. And maybe people, let's use Nintendo as an example. That's traded in Japan. I think a lot of people maybe don't realize or aren't spending as much time as they should based on the size of the industry. Just given the fact that there aren't as many options in terms of single securities for people to get exposure. That said, that's kind of where the ETF comes in, right? Like, if you believe in this, just kind of buy the ETF with that, especially if you don't have the ability to buy direct in Taiwan or Korea. And then I would also say it's this generational effect. Personally, like the way that we're seeing people find us, it's definitely skewing to a younger demographic. And we're getting in front of those investors. But older investors and older advisors still control a large chunk of the wealth in this country. And I think for them, it's kind of a learning curve of, hold on, you're saying it makes that much in revenues and that many people are watching? That just takes time.
Got it. So it's an education thing. That makes sense. I mean, it's interesting to see, how, all of how this entire industry kind of truly is global. And I think when you mentioned like Nintendo is not traded in the US, can you talk a little bit about some of the kind of more popular companies that your fund has in it? Because I think a lot of people might in the US might say, oh, well, Twitch, I have money in Amazon. That's my, I'm covered there. But obviously, you guys have a lot of other, when you mentioned this pure play aspect, I guess, can you elaborate a bit more on like what that means and who are some of the larger players that might not be in the US that the fund has?
Sure. And we're kind of going back to an earlier comment, which is buying Amazon to own Twitch is you're missing the mark if that's the way you're going about it, right? I think if Twitch shut down tomorrow, Amazon the stock would say, okay, don't care. In terms of some of the companies that are kind of comprise our top holdings in that fund, one that I think a lot of people have heard of but aren't really that familiar with is Tencent, traded in Hong Kong. That is one that you can buy via an ADR in the US. So some people are able to get exposure that way. We view Tencent as kind of a mini ETF in terms of how many games companies it's invested in. It holds all of Riot Games, which is League of Legends. It holds somewhere around 40% of Epic Games, which is Fortnite. It also owns Supercell, a big mobile esports company. So they kind of have their hand in a ton of different things and really have a foothold in that China market. Some of its daughter companies that we also hold are Huya and Douyu, which are actually Chinese versions of a Twitch, which you mentioned. Twitch, as with many US apps and websites, are banned in China. So these are kind of the two leading companies in terms of game streaming in China, which is 5 times the size of the US market in terms of MAUs. Those are both listed in the US, so that their ADRs trade on US exchanges, so people can buy direct there. And then one last interesting company I'd point out, and this speaks to our pure play methodology, is one of our top holdings is Modern Times Group, trades in Sweden, which is the parent company for ESL and DreamHack, which operate esports leagues, esports events. And if you did a market cap weighted type of a product, you'd really, that's not that big of a company. I mean, it's less than $1 billion in market cap, but we say that's really an esports company when you look at it through and through. We want to give a higher weighting to that.
So what you just spoke about were a ton of companies that I have heard of some of them. I don't understand probably most of them. So I guess, can you elaborate a bit on so people, I think, generally understand what ETFs are. You can buy them. There's a basket of stocks. Everybody likes to use that analogy. When you talk about, can you talk a little bit about what happens behind the scenes? So what makes you choose a certain company over another one to be included in your, included in the fund, and how does that change? And, do you guys have people on the ground in these countries, or how are you thinking about kind of building that portfolio underneath your, one of the funds?
Yeah, so for us, we rebalance the ETF every quarter, both of our ETFs every quarter. So every quarter, we're running screens that we've put together. We don't have boots on the ground, but that wouldn't be as scalable of a business. We're running screens from companies' public filings. So whether it's a 10K, which is an annual report, or an 8K, a news release, or a company's presentation they've given to investors, and screening those for keywords that we've determined are relevant for the given theme. So in the case of NERD, our esports ETF, we're screening for esports. We're screening for video game streaming, or just gaming more broadly. And that really provides the framework with which to identify a lot of these companies that, quite frankly, even we might not come across in kind of our day-to-day. And that's kind of the primary framework. In terms of weighting, we're assigning classifications to each of the companies, and really going for pure plays versus cores versus non-cores is kind of our proprietary way of looking at it. So every index and every ETF is going to have a different methodology. When you're talking about passive ETFs, which is what ours is as well, really important for people who are investing in an ETF, at a minimum, look at the holdings. Look at what you're buying into and what the ETF actually holds. We talked about how some of these ETFs that say they're one thing really hold. When you look under the hood, it's like, this looks a lot like the S&P 500, but it's a vegan ETF. What's going on? The second thing I'd recommend is go to the index website, whatever index the ETF's meant to track, and glance at the methodology, give it a read, see how the company is selecting securities. So some have very different methodologies, and important for people to check out.
Got it. That's helpful. So it sounds like what you're doing, a lot of the work that needs to be done in order to be able to say, look, if you invest in one of our funds, you are investing in, this pure play, quote unquote, way to to ride the growth of the esports and gaming market. So that's why I think, ETFs, I think, are a lot of really interesting to especially younger investors that, are just getting started in the market, and you sit down and ask them, what are the things that you like to do individually? Going back to your point about investing in what it's like esports and gaming is a simple one. And I think that probably gets a lot of younger people excited. Can you talk a little bit about your other fund, BETZ? Obviously that was a new launch, and sports betting and gambling is definitely something that's existed for quite a while in the country, but it really wasn't until about, a year or two ago when it started to, we started to see a big push across legalization of states. How are you looking at that market? What's interesting to you? And can you talk a little bit about sports betting?
Yeah. So the ticker's BETZ, by the way, BETZ. Be remiss if I didn't mention that. And really what we're going after there is sports betting, both online, which is where we think the future is, and offline, as well as iGaming, which is a fancy way of saying kind of online casino. And really, when we looked at what was going on with the DraftKings SPAC, with you mentioned regulatory momentum throughout the US, you also have momentum in Brazil in terms of potential legalization. We said this is really an industry that feels like it has a lot of catalysts for it moving forward. That's one. And two, really fits into our secular growth type box, if you will, based on the fact that the industry is undergoing this transition from physical to digital, which fits in not only with what is going on right now due to coronavirus. The entire economy shifted from physical to digital, but really what we believe in longer term. And when you look at this is also called the gaming industry. It's just a different gaming industry, or gambling industry, if you will. You're talking about $500 billion in gross gaming revenues per year. by that definition, it's actually the largest form of entertainment in the world. Only about 10% of that right now is taking place online. And we think that over the coming kind of period here, measured in years, not decades, that will continue to shift in a somewhat meaningful fashion. So really, when we looked at it, we said, this is a really interesting market, and it also is a market that is at the top and center for U.S. investors, who ultimately are our clients at the end of the day. And it's one that we said, I think we can put together a basket. No one else is doing it, which was surprising to us. So it made a lot of sense.
It's crazy to hear about those numbers. I mean, $500 billion, is that global or U.S.?
That's global. U.S. And this is just to be clear, this is gambling in its entirety, not just sports betting, but that's global. And I think a lot of the excitement right now is focusing on sports betting in particular in the US. And it's kind of this arms race in terms of who's going to win the US market. When you look at kind of the business model right now, it's all about acquiring users. You had, I forget when it was, a couple of years back, when you had it felt like every single commercial on TV was either DraftKings or FanDuel. And now you have bigger players getting into the market as well. BetMGM is one example. Really, it's kind of all about customer acquisition right now, which works in today's market because some of these companies are still investing in the future and aren't turning a profit yet. But when you look longer term, these can be really profitable businesses. We're talking about 25% EBITDA margins for running a kind of profitable sports book. And it's really difficult to try and pin a number on U.S. regulated betting because it's taken place in this unregulated market for so long. But we can look to countries like Australia, like the UK, that kind of have these developed betting markets. And we're talking about billions of dollars in terms of revenue, somewhere between 10 and 20. I mean, who knows where it's going to be at maturity. And then the longer term, really interesting play here is that of iGaming, which is online slots or online blackjack. And as you can imagine, if you've ever played those games yourself, the house tends to win more there than they do in a sports bet, where all you've kind of got is the vig up for grabs, but you have a 50-50 shot of winning your sports bet. So that's really where these companies are going to go longer term. There's one really interesting company in our portfolio, Evolution Gaming Group, that does kind of live online casino, where you're actually watching a live stream. Because I think a lot of people, I know for me, my hesitation is playing online blackjack. I don't trust the algorithms and the computer that they're giving me a fair shake. If it's someone physically dealing the cards, I'll give it a try.
Right. Yeah. That's an interesting point because I feel like a couple of years ago when I was dabbling in crypto, there was some site I came across that basically was like, you can go and gamble your crypto here at a click of a button. And I was taken aback by that. I was like, wait, this is, the opportunity here is massive. But to your point, like if the house always wins, wouldn't it be like advantageous for everybody and their mother to start a casino? Because especially now that you could do it online, and essentially the costs of starting it will come down in the future. I guess, are you looking at, is there going to be all of a sudden VCs that are investing in online only, whether they're iGaming or whatever you want to call them, casinos? Like, do you think that's going to be a huge kind of market for startups, where I feel like we haven't really heard a lot of these? You've just heard of the Caesars and MGMs and whatever. Is this going to be like a hot market for entrepreneurs as well, you think?
Like on the surface, it would make a ton of sense, right? Like there's this blue sky opportunity. Who knows how big it can become? That fits a VC type model. But I think uniquely what you have in this case is like the ability for you to kind of have a strong legal team and work with regulators to get things up and running makes it so that the incumbents, and we've seen this play out, right? If you have a brick and mortar presence in XYZ state, the regulators are already accustomed to working with you and things like that. So like there's actually the biggest barrier to entry, I would say, in this space is the regulatory one. And beyond that, we're still really early in terms of this even being legalized. iGaming is only legal in a handful of states. Sports betting in person is somewhere around 20 right now, but even some of those are saying no to online. You're also dealing with states like California, where tribal casinos have a really strong presence and foothold with the government from a regulatory standpoint. So like on the surface makes a ton of sense, but then you realize how much, it's not about the software, it's about the customer acquisition, and then it's about the kind of incumbents in their regulatory position.
Yeah, that's interesting that you bring up the customer acquisition element of it, because I think, as somebody that's worked in advertising for a while, the two areas that are typically kind of no-go zones for a lot of big brands are, adult content, pornography, that whole world, and then also gambling have been like on blacklists for all these big brands. But then now all of a sudden you see Penn National Gaming acquiring a media company, and then you start to think like, there's been all of these publishers that have been kind of, accepting very little money from advertising, but they're doing what they love, which is talking about the spreads, talking about games that you can go and bet on. And now all of a sudden they're kind of a target for potentially acquisitions. Do you think that the Penn National deal with Barstool is kind of the tip of the iceberg, and that we're going to see a sea of M&A, or, are we going to start seeing more media companies that start to emerge, or ESPN does some stuff? How do you see this market kind of panning out from somebody that might casually like football or basketball? Is it all of a sudden going to be getting jammed down my throat, or what do you see happening here as the industry continues to evolve?
Yeah, I mean, there's no question that, you mentioned ESPN, they're going to be involved. Fox is going to be involved. Media is definitely going to play a role. And I think over time, you'll start to see sports books sponsoring given leagues. And on the bottom of the screen, we saw a glimpse of this, I think, with the XFL. You actually saw the spread on the bottom of the screen. And like, what that can do for customer acquisition is potentially huge, right? I see the spread on the bottom of the screen. It's like, okay, let me go download the app and place a bet and make this more interactive. And I think that part of that's like why we like esports so much, is it's such an interactive form of entertainment. Betting is doing that for something that otherwise was very much a passive experience. And I think that really speaks to younger generations too, right? Like watching a baseball game for a kid who's 12 years old right now, unless they like love baseball, it's just boring. Now, obviously,
Right.
That 12-year-old isn't going to be gambling, but fast forward 10 years and maybe they will. But in terms of the Barstool acquisition, I think it was like so brilliant. I mean, I wonder where Penn National stock would be if they hadn't done that deal, and it wouldn't be anywhere near where it is now. I just want, the thing that makes me hesitant in terms of saying there's going to be a ton more M&A is how many assets, how many properties are there out there that, one, fit into the mold of being sports centric like a Barstool, and two, kind of have the very, and as a result really have the very focused customer base that's really valuable to a company building out online betting or online casino. I think that they were like really unique in that standpoint. But I look at that deal and I'm like, they got a steal. If you see the work that Portnoy is doing right now with no sports on TV, it's like incredible.
Yeah, and to that point, I mean, hearing a lot about just both with esports before and now with sports betting, and the fact that ESPN might now start having tickers at the bottom. This kind of reminds me a little bit of like, we're bringing this back to finance for a minute, about like, how has there not been any entertainment really focused around like the stock market? I mean, it seems to be like CNBC and Fox are kind of these big media companies that are really just reporting the news. But there's been, up until kind of Day Trader, I feel like there hasn't really been this idea of entertainment. Yet the stock market is one of the most open markets to be able to quote unquote bet, if you want to call it that, or invest. And if you look at what the odds are on sports betting, they're probably nothing compared to what you could return in the stock market. I'm curious if you think that there's going to be, where you see, just media going with, knowing what you know about media and finance and all these other markets. Do you think that there's going to be, with the rise of retail trading happening today, anything interesting that's coming out of this that you're noticing, that you're kind of, keeping an eye on?
I mean, 100%. And hopefully you guys are doing something to work towards what kind of, I believe is missing in the grand scheme of things. But like, I think it's all, once again, it's a generational thing. I think if you go back 30 years, the thought around investing, and part of this is low interest rates too, right? Like back then in the mid 80s, you could earn mid-teens on treasuries. Like that, then as a result, that made sense to have that as a portion of your portfolio. Now it's shifted due to low rates. It makes sense to be more in the stock market versus the bond market. But beyond that, I think as a result of that too, people are not taking investing, like they're thinking about it in a much more fun and exciting way than it was ever thought about before, which I think is a good thing. But at the same time, I think a lot of the old guard says investing needs to be really serious, and you need to, look at it exactly how it was taught in the textbooks and all of these things. That's going away. There's no question about it. Now that has a place, no question. There's definitely a place for fundamental analysis and understanding. But for the average person, they can also do a lot of research that they could never do, 20, 30 years ago now online. And as a result, I think that more people are going to get involved in investing with small amounts of money when they're younger. They're going to make mistakes. They're going to learn. Then they're going to continue to invest. And I think I feel like I'm tripping over myself here, but like there's such a tremendous opportunity for a new age way of communicating about finance and investing. I don't think anyone's quite figured it out yet, but I'm excited to see what comes out of this.
Yeah, and it's always been interesting to me, just thinking about what we do all day or what culture in America does all day. It's like we show up every day to work to go and make money. Yet when it comes to actually managing or investing that money, people get really scared. And they don't want to, ask the questions. They want to kind of leave it to the expert. But then you think back, big picture, you're spending almost all of your life at work to make money. But then if you have an opportunity to make money with that money to achieve compounding growth, people, they don't want to open that cage up a bit because they're for whatever reason. And I think like being able to kind of bridge this gap and say, guys, like if you can apply some of the learnings that you apply every day to furthering your own, the company that you work for's growth to your money's growth, like you could, you don't have to work as much. And I think that's ultimately the message we want to put out as Bullish is to say, look, if you can just take control of it and keep your eyes open, it's not that hard. And we're not trying to say, look, you can come in and beat the market and get all this, these crazy returns, but like understand your picture. So that's why we ultimately are, that's why we exist. And that's why we want to have folks like yourselves on to understand what you're working on. And, if somebody wants to get exposure to, these trends and ideas that they have, they can obviously, look to some of the products that you offer, which is great. So I guess to, kind of wrap things up here a bit, we'd love to hear any kind of closing thoughts from you, any questions you have for us, and then ultimately where people can find you. And then if there's anything else that you're working on, we'd love to hear about it.
Yeah, I think one last thing, just playing off of your last comment, is most wealth is generated from your investing your capital and not your time and labor spent at work. And I think like that simple concept is lost on so many people. And it's kind of finding this balance of the stock market is not a casino. It's really a place for you to generate long-term wealth. And that doesn't mean it can't be fun. It should totally be fun, but finding that balance between having fun and also treating it as a way to build money for your eventual retirement, like that's the way to approach it. And I guess I'll just leave it with that. In terms of what we're working on a couple new ETF concepts. One that we thought about was an ETF that invested in publicly traded sports teams. I'm not sure if we're going to move forward with that, but if anyone has any ideas they'd like to be kind of seen made into tradable products on the exchange, we're always open. Easiest to find us, roundhillinvestments.com, or on our Twitter @Roundhill.
That's great. Will, thank you very much for joining us. And we look forward to seeing all of the, all the new products and your success. So thanks a lot for your time. And we'll talk to you soon.
Sounds great. Thanks, Brian.